What's up, everybody? Welcome to the watch list of September 29th. And y'all know this is a lot more than a watch list because I got to teach you all the gems I could pull from last week. And then we're going to use it to help us get better for this upcoming week. And so with that being said, let's really start with last week, man. Actually, I'm going to have to go further than last week and come back to here. Back to here. Remember, I had drew this arrow. Now, I redrew this arrow. You know the rule. We don't touch our arrows. If I draw an arrow on my screen, it typically stays there. But I had initially deleted this because we had moved so far past it. I wasn't talking about it in class no more. But I wanted to draw it again to make a point. You guys may remember when price was over here, right around this green candle. I had drawn this arrow in the pre-market and said I expect price to revisit this 4-hour BISI, stay on the upper half of this 4-hour BISI, which is a bullish fair value gap, and we should use this to take us to this blue area. This blue area was the target, and so it was, man. Has it not been exhausting in this market lately? This was such a treacherous journey as of late. Like we've been creeping our way there. We're going directionally where we want to go, but the manner in which it's delivering has been unfavorable. It's not something we want to see. We like to see clean movement, not this choppy, slow, grinded out move. It's not what we wanted to see. So yes, we're correct about where price is going. That doesn't mean it's something you want to participate in. So a quick note on that is, especially with certain lessons that you will learn if you ever come to the university, you'll realize that you will largely always know where price is going. That doesn't mean we're perfect. We're not perfect, but we're pretty freaking accurate with knowing where price is going on all time frames. That does not mean you should be taking every trade in the market. So let's say you were trying to trade upside, you can probably see how it's very difficult for a person to, I guess, maintain a position if price is pretty much moving sideways. It moves a little bit, moves sideways again, moves a little bit, moves sideways again. It's not favorable. So even though you may know where price wants to go, don't fight price action. You have to come to the place as a trader where you say, okay, although I know we're gonna be going up, I'm gonna sit out this move and wait for the cleaner move, because I'll rather wait for the move where, let's say we tap into the area I'm targeting, it's gonna have a large retracement. And so I'd rather trade this move than the up move. And remember, once again, I'm not just talking about a daily chart or a 4-hour chart. This is all time frames. You don't have to participate in every trade. So you always want to look at how something is moving to let you know what the true direction is. And so we talk a lot in this, and even the free classes, about price, the manner in which price moving, the manner in which price moves, letting us know the true direction. So if price is like staggering into a POI, such as this blue area that we've been targeting, that's a good sign that price is going to react to this area. Hopefully this area could send us to new lows, right? Hopefully. But even just an initial reaction to it, to wipe out some of the liquidity I was built up heading into it, is something that's expected. So if you ever see price chopping up into an area that you're interested in, such as this daily SIBI from July 17th, we've been talking about for literal weeks we've been talking in this area, then you shouldn't be surprised to see a big reaction come out of it. And we'll get into that because that's part of what happened last week. So that's my first point. Now, same thing, another thing that happened in another week since then was we got right here. Obviously, we got super close to the blue, and then price was retracing. At nighttime, during the formation of this candle over here, these candles over here, I said, I think we're gonna return into this 4-hour bullish fair value gap. Bodies will hold it. I told my mentees, we talked about the potential for it. Let me show you closely the potential for us to wick into this 4-hour fair value gap, wick into it while the bodies hold this one right here. And if you don't know what a fair value gap is, I have an explanation on my Instagram. And also, if you don't want to check that, after we finish recording, please ask me to explain what a fair value gap is, because I think it'll really help your trading. I'll tell you what it is, because it's a large part of what we do. I know I got new people every week and they've never heard certain terminology, but I can't cover everything in one day. So just ask me a question after the Zoom is finished recording. All right, so boom, bodies held this, tapped into this. Everything is happening exactly how we want to, but we wanted to use this to take us to the blue area. But once again, y'all, you see the movement here, right? The movement has been extremely unfavorable. So even though we know where price is going, it's just something that you may not want to participate in. This is low probability conditions. All right, so boom, price does that. And now let's get into these circles. You're probably like, yo, why he got these bubbles on his screen? It look like a kid is blowing bubbles on my screen. Like, hold on, y'all. There's a purpose to it. So first of all, these last two circles, once I press the play button, you're gonna see them get filled out. But let's talk about these right here. These four. Notice that here on this, I believe it was an hourly. Yep, on an hourly. Perfect. On this hourly time frame, let's notice that price, we're not really breaking any lows. So when you think about it from a perspective of who has been protected in the market, you could say that the bulls, all the bullish people in the world, they're all protected right now, because every time we make a dip in the market, they're not really getting stopped out. This wick came slightly below this wick, but it's clearly not enough to, destroy anybody. Like if you had your stop loss directly at this wick, okay, you got stopped out. But best believe there is an entire liquidity pool sitting like right here. So most people never got stopped out on this down wick right here. So my point in this is, you always want to think, okay, who has been protected thus far in the market? Because eventually they will become the targets. They don't let you just ride a trend all smooth, for too long before they come and target you. That's how you got to look at it. So, every dip is getting bought, and we're never breaking any of these higher lows. So this goes into like simple market structure, which is something I don't even trade. I don't really trade traditional market structure, break a structure, change a character. I can debunk that for you guys one day, why that's not the most efficient strategy. But and why we could get in plays a lot earlier, and why we could exit profitable plays a lot quicker than people who are looking at your traditional break a structure, change a character. Because not every high and low in the market is actually important. But let me not go on a tangent. So my point is, even if you were just trading traditional market structure, you can see that pretty much they're protected. Everybody that's bullish, all these higher lows are protected. So, all right, that's that. Now this is Wednesday, 10 a.m. Okay, so what happens here? Let's see. And same thing, there was a higher low right here that's also protected. And so now Wednesday closes, the day ends on Wednesday here. You can see the day ends, and then price in the after hours just starts ripping. Who remembers Wednesday's price action? Like, I don't know who was able to catch Wednesday's price action in the nighttime. I wasn't trading that night. I don't trade those hours. But man, it like literally in the futures market, it opens up at 6 o'clock Eastern, which is just around right here, and just look what happens for real. Just like it. First of all, no one ever got stopped out. If you got in calls or you got in longs as soon as the market opened, you were just good, and the market was ripping, just ripping to the upside for the whole entire night. Just imagine you got in that open. You really like were just having the best night of your life. Like I'm there in my bed sleeping and enjoying my dreams and all that, and people here getting rich, and I'm just like, man, dang. But at the end of the day, everybody remember, we targeted this area for a reason. Yeah, the upside was nuts, but we targeted this area for a reason. All right, so now let's fast forward a little bit. All right, so price starts to slow down. I went a little bit too far, but it's okay. Price starts to slow down here. You see it's getting choppy. This is what we call engineering liquidity, which means that they're pretty much baiting people to place stop losses in certain areas. So for example, when we move sideways like this, what do you think happens? That means that there's stop losses on the downside, there's stop losses on the upside. So here you can see that we made a move to the upside, making people think we're about to continue bullish, and then we have a hard move down to kill everybody that has stop losses right here, right? Everybody who has stop losses trailing this move, they just got killed with this one candle. It took one candle to stop all of this price action out. That took from 2 o'clock. Let's go from 2 o'clock to like 8:45. Geez, 6 hours, 6 to 9 hours got killed in all of 15 minutes. You see what I'm saying? And that's how price takes liquidity. This is a form of liquidity. So when price takes liquidity, it tends to take it extremely aggressively. And so I'm actually going to release a video on my Instagram talking about it, potentially most likely this week. Oh no, I actually released it already. I released it already on my Instagram. I said, like, anytime you see price moving steadily to the upside, be prepared for like monster candles to come in. All right, and so that's what you just saw here, these monster candle, because when price is bullish, it doesn't move like that. You know, it doesn't move like this. So you should prepare, like something's about to happen. Be very wary. Be very wary whenever you see price moving very stubbornly like that. I can't stress it enough. All right, so with this being said, you know, this is a 930 candle. It's happening right at open. We're already dropping off, but let's look at the hourly time frame for a second. So the very first PD array that we come to in the hourly is this hourly bullish fair value gap. So something you want to always check for is the nearest PD array, because when price is extremely strong, we're gonna hold the nearest PD array and continue. For example, look at this bullish move right here. This is obviously a pretty big move. The nearest PD array that we came into was this hourly bullish fair value gap right here. Obviously, bodies held it, which is what we want to see. Bodies hold it, not just wicks. Bodies held it very well, and literally there was no other retracement. And so once you see bodies not holding the nearest PD array, then you start looking for the next objective. And the next objective, mentees, you guys know where that is. That I probably won't just, I'm gonna be real, I'm not gonna like explain out stuff that I would say is definitely mentorship material. I gave you guys so much already. Please don't be mad at me for holding back certain things for my paid members. But I will say this is how we can anticipate bigger moves coming into the market. You do want to look, the first indication I will tell you is that we invalidated the very nearest PD array right here. All right. And so once we invalidated this off the rip, you already know we're coming down here. Off the rip. There's nothing, we're not worried about any other thing. So for people who on their screen have fair value gap indicators, they drawing out, you know, this, and they're drawing out this tiny one, and they're drawing out, hold on, we gonna do this so I can show you what your charts really be looking like. There's another tiny one right there, and there's another one right here, and then there's another one right here. All of these is on your screen, making your chart ridiculously noisy, and you think all of them are relevant, but in context they're not relevant. And so it's destroying your analysis, is bringing you analysis paralysis, because you're bringing validity to a whole bunch of areas that are not going to affect price, because price is moving based on objectives. So it's like two things right now. Is one, we tapped into our daily bearish objective, meaning when we hit there, we're expecting a bearish reaction from it right now. So all the upside that we've been talking about since, my foot down, my thing's lagging a little bit, but all the upside we've been talking about since down here, what was the point of it? We highlighted this at the very beginning of this class. It was all from down here was in pursuit of the blue area. And so I was actually just talking to phase 2 about this like probably an hour ago. My phase 2 mentees, I was saying that there's liquidity on both sides of the market, like tons of liquidity on both sides of the market. And liquidity meaning pools of stop losses, right? Where people place stop losses. People place stop losses on any given pivot point in the market, any lows, any highs. That's where people's stop losses exist at. So if you can imagine, there's stop losses everywhere. There's stop losses on top of this high, on top of this high, on top of this high, on the bottom of these lows, on the bottom of these lows. There's stop losses everywhere. So people tend to just say, oh man, there's a whole lot of liquidity to the downside. Look how many stop losses we haven't tagged out yet. Look at all these circles that never got stopped out. Yes, that's true. But the thing is, you have to know when we're going to go for those stop losses. And that's where you have to pay attention to order flow and objectives. So our objective to the upside was this daily SIBI here, right? That was the objective to the upside. By the way, I just got the link for the mentorship sent to me. So I'm gonna get that to y'all ASAP. Let me just send it to myself real quick so I know where to find it, because I told you guys I should be getting that link any second. I just got it sent to me. Beautiful. So December is coming. It's coming. We got the link now. It's lit. It's really lit. All right, perfect. So back to this. So look, y'all, there's a lot of liquidity to the downside. That doesn't mean we're gonna go for it just yet. So if you're staring at liquidity, like, yo, there's so much sell side liquidity, there's so much liquidity below us. Okay, but guess what? There's a lot of liquidity above us as well. So they still working on buy side liquidity because they have an aim at coming to this blue area. Once price is in this blue area, at this point, now you could start to see, all right. Maybe it's time to go bearish. Now, it was never time to go bearish until we hit here. That's why we've been bullish since way back when. Although there was a lot of liquidity on the way up, we're just like, yo, listen, we not tripping on this. We're not tripping on this circle, this circle, this circle, this circle, this. We're not tripping on none of these circles because until we hit the blue area, they will not be targeted just yet. So I got a question that said, why did I use the daily, why did I use this SIBI for NQ as a target versus the weekly SIBI? Great question. So I almost want to show that on a different chart, but I will just, I don't want to like, whatever, let me see. I don't know why it's not letting me show it, but I will, please don't let me forget that question because I'm gonna end up, I could talk about that. Please don't let me forget that question, all right? Please. Do not let me forget to answer that question, but I will get back to that question. Let me just finish this demonstration here and I got you. But yeah, I targeted the daily one versus just the weekly one for a reason, for surely. I will talk about that. No problem. All right, so boom. My point is, in order to, your first indication that order flow potentially is shifting is once we invalidate the nearest PD array. So in the hourly, that's my point. You seen us invalidate this. Well, you can tell we somewhere around here, you could say, okay, yeah, this is not holding price up. So at this point, you're now looking towards the bearish objectives in the market. And so now you should just be flipping to the right side of the market. You saw that it's the, yo, I'm telling y'all right now, it's literally the same logic on the 5-minute time frame. So man, this is why price is fractal. It's a beautiful thing. It's a beautiful thing. Look, so imagine you were trading the 5-minute. All right, time and price. Everything's about time and price. So when would you expect the big move in the market to happen? At 8 something a.m., at 9:05 a.m., 9:15 a.m., or like how about 9:30? You would expect us to start making that move when the market actually opens. So all of this choppy movement is like, you shouldn't even get faked out by any of these red moves and nothing like that, because truly I would start looking for the move to happen when it's time to. Time is a very important element in this market. And so this big red candle here is 9:30. This huge red candle is the 9:30 candle. Now, what was the first indication that we're going to trade to the downside? The same thing I said from the hourly. Once we invalidated the nearest PD array, which is this 5-minute bullish fair value gap, once we invalidated that, that's the first indication that order flow may be shifting. All right, now there's so many more layers to what I'm saying, but I'm giving you something, right? I'm giving you something. You should, if you ever peep a very strong move, we tend to hold the nearest PD raise, the nearest order block, the nearest bullish fair value gap, the nearest volume imbalance. These things get held when we're pushing extremely strong. And so when you see it get invalidated, that's the first time you should say, hold on. We might be having a deeper retracement or a whole reversal for real. All right, so on the 5-minute, you see we invalidated the green fair value gap. And so now you can anticipate a lot more downside. Now, how much more downside? Well, just look at the 5-minute move. What did I tell y'all? All of this choppy crap right here is liquidity. So if order flow is shifting to the downside, you could already see how we could catch a huge move, even just to take these lows. Shoot, if you stopped right here, you still made a lot of money. You still made a ton of money just trading this. But what is this purple area? We showed you on the hourly. On the hourly time frame, this purple area is the nearest hourly bullish fair value gap. So once we invalidate this, oh my gosh, that hourly is telling you we about to have a deep retracement. Wow, look how we scaling. I feel like I'm losing some people. Y'all not hearing me. On the 5-minute, once we lost this, you can anticipate a big 5-minute move. Then we get to the hourly area. Once you lost the hourly's nearest fair value gap, Now you anticipate a big hourly move to come into the market. Wow. So then now you see how a person can catch this entire drop off coming into this area. Come on now. So because this is representative of the hourly retracement. So if I go back to the hourly once again, you know, with other layers of knowledge, you'll see why we don't care about this bullish fair value gap. We don't care about this bullish fair value gap or any of these little ones. We don't care about none of that. Real talk. But I can't say everything, but please forgive me. I know I'm doing these for the free ski. So anywho, now you get to a bullish PD array. There's an hourly bullish order block right here. Now to me, I wouldn't be looking at this order block to create new highs in the market, right? I wouldn't be looking for this OB to, you know, send us to new highs because we're coming off of this daily bearish fair value gap, and I feel like it should overpower this hourly one. If we were truly strong and we wanted to move higher, to me, if we wanted to move higher, I would anticipate that we would have used this 4-hour bullish fair value gap right here and created a higher high. So once we invalidated it and we came as far as this, I'm not too keen on this. I could see that getting traded through and creating lower lows. Now here's the thing. Do you anticipate that continuation just yet? Do you anticipate the continuation just yet? It will happen if this next candle can be bearish. When this candle pushes up like this, if you're a bearish person right now, you're not happy because like, dang, you're not gonna get no continuation. Do you expect a higher high now? No. But you could expect chop. And so when the market, it's in the free community. When you guys seen this coming into Friday now, when you seen the market look like this on Friday, what did I tell you? I said anticipate chop today, because I already know, based on the fact that I don't expect us to invalidate this high, at least not on Friday, and I don't expect us to drop lower than this low yet. You can see why it's like, all right, we're probably just gonna chop right here in the middle. So this is where you start getting really good at recognizing defense in the market, because we pretty much just stay right here. We ain't really go nowhere. Into what is that? Is that where we are right now? I guess that's probably where we at right now. So yeah, that's for one. So we've been consolidating on this low probability bullish order block, while simultaneously holding this bearish fair value gap on the hourly chart right here. And so when you're in between, if you guys pay attention to other classes we talked about, when you're in between PD arrays, such as an order block that's bullish and a fair value gap that's bearish, that's oftentimes where you see consolidation happen in the market. Because if I was a bull, I'll be looking at this area to take us higher. If I was a bear, I'll be looking at this red area to take us lower. So that's the perfect place for them to engineer liquidity, meaning pretty much mess with people's contracts, have a lot of stop losses generated on both sides, and then at some point they're gonna run out one of these sides. How do you know which side they're gonna run out? And I'm talking about run out as in continuation, not just a sweep. I'm not talking about a sweep. I'm talking about like which side they're gonna actually truly make a strong move out of. You would know that by going to the higher time frame and letting the higher time frame decide for you where price is truly trying to head to. So, you know, if I'm a person that feels that price is about to go really bearish right now on the NASDAQ, like, hey, I think that we're using this blue area to go lower, right? If that's my analysis from a daily time frame and I'm looking at some hourly consolidation, all of a sudden I have a direction for my hourly consolidation. I'm expecting two types of delivery. I'm either expecting price to just drop out randomly. At some point, we're going to break consolidation. Or I'm expecting us to sweep these highs and then drop out like that. We might even sweep these highs to the left and then drop from there. But either way, if the daily time frame told me that I should be remaining bearish, then you can see how all of a sudden you have direction for your hourly consolidation. And so I always say don't trade inside of consolidation. I would say don't trade inside of consolidation, but trade outside of it. That's where the best trades tend to occur. But once again, if you're trying to learn like how to avoid chop, I think a lot of people know that they shouldn't trade chop, but by the time you recognize that it's chop, you already blew your account. How many people can relate to that? Where it's like, I know I'm not supposed to trade chop, but by the time I realize it's chop, I'm already severely in drawdown. That's where I'm trying to help you guys learn how to anticipate chop. So once again, if you're in between a bullish and a bearish valid PD array, if they have to be two valid ones, like a valid OB, a valid bearish fair value gap, that's typically where you see consolidation occur. So anybody who got messed up on Friday, it's you're trading low probability conditions. Y'all should know I don't do anything in hindsight, bro. Before the market opened on Friday, I told y'all what it's gonna look like. And same thing, mentees on Thursday night's class on Thursday, I told the mentees, I don't feel like we're going to continue lower tomorrow. I feel like we're going to either consolidate tomorrow or we're going to push up a little bit. What else did I say on Friday? Before the market opened, I said, if we're going to move lower on Friday, we need to drop as soon as the market opens. This is in the free community. Look at this candle. This is the 930 candle. I said, as soon as the market opens, we need to drop if we're going to move lower. This right here is a 930 candle. What happened? As soon as the market opened, we dropped. We never broke that high for the rest of the day. For the rest of the day. That's it. So it's like there's a logic to everything we say. We don't say things in hindsight at all. Will we consolidate if the fair value gap present was reversed, meaning bullish up top and bearish below? Bullish up. I'm not sure what you mean by the question, but I would just say as a general rule of thumb, it's like oftentimes in the market where we're at a point of contention where it's like, this is a major moment for the market, right? Like, as I told you guys, everybody bullish has been protected, right? And to this moment, they're actually all still protected. And so it's kind of a moment of like, okay, are we about to start targeting these stop losses down here, or are we still moving to the upside? And so you have bullish people are hoping that this order block could work out, and bearish people are hoping that this fair value gap that's bearish could work out. So when we're in between sentiment like that, that's the perfect time to chop everybody up. So if on all time frames, what I'm saying applies to every time frame. And so when you're in areas like those where we're kind of in between sentiment, that's the perfect place to chop. That's usually where you see chop happen at. What else? Show you reversals. Does the SIBI just show you reversals? Is that what the indicator is for? No, SIBIs are used for tons of things. Fair value gaps in general are used for many things in the market. They provide so much insight to what price is trying to do. It's not just for taking plays on fair value gaps. Like, it's so much more to it. Now, and I also don't use any indicators. I don't use fair value gap indicators because fair value gap indicators don't have any knowledge on which fair value gaps are relevant. For example, your indicators would have showed you all freaking 5,000 fair value gaps that exist in this green price leg. Meanwhile, I was short this whole day. I caught this whole drop off, right? Because I'm ignoring all of these bullish fair values because I know we're not bullish. So I don't care. An indicator could never know the nuance to fair value gaps. And that's why it's like, you can never duck the knowledge. A person has to end up getting the knowledge anyway. The sad part is most people that teach smart money don't have true knowledge on fair value gaps. They will always show you guys things in hindsight. I'm like famous for telling you guys things ahead of time. I don't tell you guys things in hindsight, and you guys watch it play out and it's like, oh, okay, you must know something, right? Because I'm not just trying to show y'all stuff. Anybody could show you like past examples. Look, guys, this fair value gap right here worked out. See, price tapped into it and it went higher. Like, okay, duh, bro. Could you have told us that before it happened? Because that's where you can tell, like, okay, this person probably knows a little something. And so I want you guys to not duck the knowledge. You're gonna still have to end up learning about fair value gaps because they're everywhere, but you have to know like which ones are relevant. Like David said, the motto of the mentorship is we call it before it happens here. That's a fact. We call it before it happens. All right, so boom. Something else I wanted to go over with you guys which is actually the same concept on anticipating chop, is a play that we took in here. So let's go to this play right quick. So I was trading with a few people on Friday, and Friday, where is at? Around 11:30 is what I'm looking for. Nope, not here. Friday around 11:30 a.m. I want to show you guys this because it's something you guys could learn. I feel like it's a good thing that could paint my point here. Okay, so it should be around this area somewhere. So Yep, I think it's around here. Okay, perfect. So here on this 15, oh, let me actually give you guys a little background. Sorry for jumping around. And let me clean this up because my chart looks noisy, and y'all should, if you know me, you know I hate a noisy chart. My charts are never noisy. I can't stand this. I'm glad I finally could delete these because I made all my points today. Perfect. Okay. So the entire day, yes, on Friday, when I was trading with just a few people, I was telling them, hey, yo, this is the initial target, this is the second target. So although we know price wants to go lower, it was still a very choppy move down. It wasn't favorable. It was not easy to trade, not a good day to trade, right? But at the same time, just know that we did have aims of price coming here, and we had aims of price coming to right here. So just remember, we have a bearish objective, we have a bearish target, bearish objective, all the above. All right, so now look how evil they are, right? Look how evil they are right about here. So they come this super choppy move down, and then they come so close and don't actually get to the target. Real frustrating, right? Now, a couple things for you. One scalp I tried to take was right here. I'm on a 15-second chart, by the way, guys. So this on a 15-second, especially as we're this close to the target, if I'm gonna make this a favorable play for me, I need to have a low risk for such a low reward because it's just a scalp. So I'm here looking at this 15-second SIBI. I'm risking all of 52 to, I'm risking 2 points. I'm risking 2 points, but if the play plays out, I'm gonna end up making at least 16. At least 16 minimum, because the idea is not to just touch the yellow line, right? The idea is to go past the yellow line, because I don't expect us to touch it and bounce. I wanted us to touch it and continue, especially to continue to this yellow line. So I need y'all to remember, like, we're risking 2 points to make 16 plus. So I think it's well worth the risk. So now, boom, let's talk about it. So I get in here. This SIBI is supposed to allow us to lose these green lows, minimum, big minimum. Price comes in, loses it, it's going well. Okay, cool, we're gonna get to the target. Nope, comes back up, stops me out, break even. Cool, got out, break even. If we were truly bearish for this yellow target, right? If we were truly bearish for this yellow target, okay, I'm sorry, because the question came in the chat. It said, do you use hard stops? How do you account for the risk of wicks? I'm typically eyeing the price movement, and for me, if we came above here on my initial entry, I would have exited, because for me, I don't want to see price invalidate this candle in general here, right? So then I would have exited. Really, definitely a close call, but we ended up coming down. Things was going well. Came all the way down here for real at the bottom of this green wick, but then you see price ended up coming back up, break even. I took the break even, like, all right, I'm cool on that, because it's kind of like this, right? If we make this move, this is a very high probability SIBI. If you're gonna go and take not only the initial liquidity, meaning the previous lows. I know this is a 15-second chart, so it seems so immediate, but price is fractal. So whatever I'm saying right now applies to every time frame. As we're trying to destroy this liquidity, this nearest SIBI here, is, especially after such a strong move down, it's supposed to take us under these lows. And if we're going to lose these lows, it should allow us to lose the yellow line, which is the hourly target. Understand? It was the hourly target. So yes, make sure you guys watch your microphone so you don't come off mute by accident. But yeah, so once price comes back up, why do you think I'm stopping on break even? Because I know that if it's coming back up right now, it has no aim at coming to the yellow line yet. It's gonna make a deeper retracement before coming to the yellow, because there's no reason to come back up here to come back down there. Like, this is the PD rate that's supposed to take us there. So to come back to it tells me price is not ready yet. So I'll take the break even. All right. Yeah, I'll show you quickly. It was just the hourly lows right here. Somebody said, can you show me the yellow target again? It was these lows right here. And then I wanted to target this next. All right. Can you see the retracement? Yeah, I'm about to show you that. If I'm reading your thing correctly, I'm about to show you. So boom. Here we go. Price starts chopping. Do I want to participate now? I see, we rejecting again. Nope. This is how you anticipate chop. This is what I'm telling y'all is so important. Y'all don't understand. Like, look, if I would, oh my gosh, this is so important. Please lock in, because I'm giving y'all super sauce. Because one thing I know is a lot of people can make money in the market, but a lot of people don't know how to keep money in the market because they get caught up in chop. So I'm trying to teach y'all how to see chop early, bro, early. This is why I did not take nothing in here, because to me, once again, the only bearish delivery is to reject right there and immediately run to the yellow line. That's the only bearish delivery. It should not look like this. We reject, come down, come back up, then reject. Nope. If you're doing that, you can have it, because that's not what typically happens when we're bearish. That's the minority case. You can only trade probability in this game. So that's the minority case. So bearishly, I'm like, yeah, nah. If we end up dropping, they're gonna have to do that without me. I'm not chasing this move. So any of these little red candles you see, I'm not getting back in my shorts. I'm good on that. Because the only how it should have happened, especially after such an aggressive drop, is we should tag into this and drop off. So y'all already see what's going on bearishly. Now bullishly, right? Bullishly. If we were bullish after coming and closing above this red wick, or even like coming this high for real, there is no reason to come back into this green wick. No. So if I was bullish, there is no reason to come back down here. So when I noticed that the bulls and the bears both just saw a type of delivery that they both look at and say, yo, what the heck is going on? Chop is about to happen in this little area. Once again, this is the 15 seconds. So this chop is not lasting all that long, right? But remember, this happens on all time frames. And so imagine this was the hourly. You could see all of a sudden, you could see how hourly chop could happen. If this was the 4 hour, you can see this how 4 hour chop happens. When you notice the delivery on both sides is not what it's supposed to be, you're about to witness chop. Bearish side didn't show me what it wanted. If I was bullish, I'll be like, why do we come back to this green wick? Why do we come back to this green wick if we were bullish? It should have never came back here. Oh, we about to chop. Like, so you know, high, low, high, low, high. See what I'm saying? So that's when you say, I bet. That's a no trade zone for me. That's a no trade zone for me. And you can see the movement. This is not favorable movement. You see what I'm saying? So that's how you start anticipating like chop ahead of time. This is like, yo, this is more important than anything we're gonna talk about. Like, y'all need to know how to play defense in the market. All right, so what did I say to the people that I was trading with? I said, what did I say to them? I said, yo, I'm not interested in upside right now. Why? Because we did not meet the bearish objective yet. And so I'm still looking for bearish setups that may occur in the market. Well, the next bearish setup I could see is we could sweep this high and come down lower. That's what I told them at the time. All right, so bad. We come above these highs, and guess what price starts doing? Yeah, it's moving real wacky, right? It's moving real stubborn. We love that. Oh man, something about to happen. If we were bullish, the only fair value gap that matters if we were bullish is this right here. Nothing else matters. So to me, if we invalidate this bullish fair value gap, we're gonna come to the yellow line next. That's it. I'm not worried about this fair value gap. I'm not worried about this red candle as a continuation OB. I'm not worried about this fair value gap. I'm not worried about this long wick. I'm not worried about nothing. Because if we were bullish, trust me, it would have been this. Nothing in hindsight. I said this ahead of time. So boom, price loses this area. Eventually, hold on. Because we chopped, as I said. We lose the area. I go short because I'm not worried about this fair value. This has low probability right there. So we invalidate it, as you can see. Not worried about nothing down here. We coming lower. Now, when we get to this part, this is what I said to them. I said, all right, this is going to be a place where we have turbulence. Because if we were bullish for real, right? Man, y'all got to hear me so clearly. Y'all got to hear me. if we were bullish, we would be using this fair value gap to go higher. I know we're not bullish, but I'm just saying, for a person that doesn't know better, they would 100% be looking at this fair value gap to go higher. Oh, remember I told you guys I hate traditional market structure? Look at it. What comes after the fact that we close over a lower high? Aren't we supposed to be bullish right now? Look, we just got a closure over this green wick. So don't y'all think we bullish? If you trade traditional market structures, so you're gonna be trying to buy this higher low, right? But I've been told you since up here, I knew we were not bullish. So that's why I don't trade traditional market structure, because traditional market structure is, you're gonna miss out on a lot of moves. It's gonna have you in the wrong direction too often. I'm trying to tell you, there's more to it. Closing over this high don't mean nothing at all. So anyways, so based on the fact that this is technically a valid bullish POI, and we have a valid bearish POI right here. Let's show you. Let's highlight what this is, and I'm gonna delete this so I don't confuse nobody. So boom, right? Valid bullish POI. Actually, I'm gonna draw it because I don't want to use. I know people be visual learners. Let's say valid bullish fair value gap right there, right? And we got a valid bearish fair value gap right there. Boom. So we're in between two valid POIs, just in opposite directions. Now you may ask, yo, Rel, why didn't you draw this fair value gap up here? Like, what makes this not valid? This fair value gap is a fair value gap I do not want to be revisited. Once again, I said this ahead of time. I don't want price to revisit this if we're truly bearish. So the only areas I'm looking at is this bullish one and this bearish one. Which side do I favor? Well, clearly, if I'm short, you guys know I favor the downside, because I know we have an aim at coming to the yellow line. So knowing where the market wants to go ahead of time is very helpful. Understand? Break away, not out, but yup. So look, here we have a this, and I said ahead of time, I said this is gonna cause some chop in the market, but eventually it's gonna go our way. So boom. Remember, this is the 15 second. So if you've seen the same scenario in the hourly, you would have been chopping up for like 15 hours before the market makes the move. Yeah, no problem. You good, man. Don't worry about it. But yeah, you're gonna chop around for hours before the market makes the move. You understand? So don't just say, oh, this is the 15-second. Nah, price is fractal. What happens on this time frame happens on every time frame in the market. Understand? So being in between two valid POIs is typically where you see consolidation. So people going long here, people going short here, nothing, they don't know what to do. And I said we're gonna end up picking a direction to the downside because we're bearish. You see, we didn't visit this one up here. You see, we used this one to go lower, and you see we invalidated this. And then what did I say? The people that I traded with, and they know who they are, they in here right now. But hey, you know, the people I traded with, what did I say? I said, all right, bet price should be able to move quickly now, because it chose. We're no longer in between sentiment, right? We're not in between sentiment no more. It chose this direction once it invalidated the bullish fair value gap. So at this point, what do? You see how we flew to the yellow like that? They ain't waste no time. They flew to the yellow line. Make sure y'all check out microphone. Somebody is off mute. Could y'all please check out mic, because I don't even see who it is. But yeah, yo, you see how we flew to the yellow? Easy money. Now, if we're gonna continue, we need to drop immediately. I'm not even gonna go over this part for real, because I gotta get to the next part of class. But if we're gonna continue, we need to drop immediately. We don't want to come to the higher end of this fair value gap. And so, you know, once you see us start coming to the higher end, you already know, like, ah, man, they about to either chop up or they about to retrace. And so there it goes. You know what I'm saying? And so this is how you start anticipating things ahead of time. And I also said that at the time of the trade that we were trading. So they might not continue because of what they're doing with this fair value gap right here. So this is, and next thing you know, we chopped up, right? So price is fractal, y'all. Price is fractal. Don't just think, oh, it's the 15 second. I don't trade the 15 second. That's fine. What I'm saying applies to your 5-minute, it applies to your 15-minute, it applies to your 4-hour, it applies to your weekly and your monthly chart. Understand? Appreciate it, Postman. He said this source is foundational. I think people are hearing me, but not hearing me for real, and they don't realize like how important this stuff really is. But it's okay. I hope those who's hearing me is listening for real, not just hearing me, but listening. So that's that. Let's get to the next part of class. Will there be a Fair Value Gap Masterclass? The thing about Fair Value Gap Masterclass is that it's very hard for me to put all the Fair Value Gap knowledge into one packaged class, because Fair Value Gaps are a part of so many different lessons. It's gonna make me feel like I'm just teaching the mentorship all over again, and the class is gonna be 17 hours long, because Fair Value Gaps find their way into like all 30 classes of the mentorship. Because our mentorship is 30 classes. Each class is about an hour and a half long, and it's 30 of them, with some bonuses. So it's like, but Fair Value Gaps are a part of like all of it. So it's very hard to just like say, let's just only talk about Fair Value Gaps, because I'm gonna need to talk to y'all about the other things. So I don't really know how to put that in the masterclass yet. I'm still brainstorming that, but yeah, I know people could be requesting that one, but it's really hard. I just be like, yo, the mentorship will really help you put everything all together. It's a curriculum style. Like it's legit. Like it's all PowerPoint presentations. It's not just me on the screen just like freestyling. It's all presentations. All right, so let's move to the next part of class right now. So let's do this. Perfect. Okay, man. Second half of class. Let's get right. So I hope you guys enjoyed the first half, man. I done talked about a lot. I ain't gonna lie. I done talked about a lot, probably more than I should. So if y'all ever hear me hold back certain information, you really can't be mad, because I give y'all so much for free, so much. So look, every time we talk, no problem, Wizard. Every time we talk about what's gonna happen in the upcoming week, we have to know what the economic events are for that week, because it gives us indication on what are the best days to potentially enter trades on. So when I look at this week, this is NFP week. This week coming up is NFP week, meaning non-farm payroll week, which is when they release employment data. Anybody who's been following the Federal Reserve, they talk to y'all about how the inflation fight is largely over. For the most part, it's largely over. They're not really focused on it too much. It seems to be under control. What could affect the overall economy is the job market. They want to make sure they have a stable job market. So we're heavily, closely watching the numbers of unemployment, and that is what comes out on Friday. So this is the most important event in the market right now. I know in 2022, if anybody was trading back then, y'all may remember every CPI day was like a Super Bowl. It's like, yo, it's CPI day, and then you would see crazy reactions in the market every CPI day because there was an inflation fight going on. Now, that has subsided. CPI is still important, but it's definitely nowhere near what it was in 2022. The important event now is actually non-farm payroll. This is our new CPI. So you need to know that that's this Friday. Now, since that's the important event, you can anticipate that they're not gonna have super aggressive moves necessarily heading into Friday. Thursday is probably low probability. Wednesday is probably low probability. Tuesday is probably low probability. Monday is the only day that actually you can expect some movement in the market, because typically the only high probability Monday of the month is non-farm payroll Monday. So the week that we have non-farm payroll, the Monday of that week is usually the only Monday all month that you can say, hey, I kind of expect something decent to happen in the market. And I swear I didn't see this here when I was making this watch list on Friday, but so I'm looking at this for the first time, by the way. Since when was Jerome Powell speaking at 1:55 tomorrow? Like, watch. Monday is supposed to be an energetic day, and of course, out of nowhere, Jerome Powell is speaking tomorrow. I swear this wasn't here before. They be real funny how they be doing this market, man. I don't know what it's about, but we already expect Monday to potentially be a day for some movement. So I'm kind of excited to see what that's about. And the monthly does close. Good point. The monthly candle does close tomorrow. Exactly. So even better. Absolutely. So yeah, Monday I expect some movement. Tuesday, Wednesday, Thursday, not so much. Friday, yes. Okay, so that's with that being said, let's move to the actual technicals. Let's move to the technicals. Now I'm gonna get off futures and I'm gonna start talking to the other markets for a second, and I'm gonna get back to it because I got all types of traders in here. It's a party in here every week. All right, so man, remember I told you guys about anticipating chop? Look at this. Look at this. We said the last week's plan. I said, yo, Forex traders, I'll be careful because DXY is gonna most likely consolidate this week. Look what DXY did I'm on the daily chart. Did I lie? Did I lie? So anticipating chop ahead of time has really become something I've really honed in on in 2024. It's been such a major element to like my progression as a trader. I'm trying to just pass the knowledge to everybody. Like learning how to anticipate chop is such a good skill, because if you try to trade this, you know, it just probably didn't go too well. A lot of misdirection. So you really want to see us not invalidate the chop. You want to see us break out of the chop and go towards a higher time frame direction. The difficult part about higher time frame direction on DXY right now is that we're in a crucial area. So I feel I could paint that better by taking you here. And whether you trade Forex, DXY or not, like y'all should know, my watch list is always about lessons that you can apply to any chart. So I'm not just telling you what I think is gonna happen. I'm trying to explain why I say what I say. So if you see DXY, yeah, I can see that we're in between. Oh my gosh, look at it again. This is beautiful. This is exactly what I told you guys about on the 15-second and on the hourly. Look at the monthly. We're in between a valid bearish POY and a valid bullish POY. That's where you see chop happen in the market. I didn't even like, this is perfect for y'all to see, bro. This is the valid bullish POY and the valid bearish POY. Let me put 1M here so y'all know it's the monthly. But yeah, that's where you see chop happen. We've been on the monthly chart, bro. On the monthly chart, we've been chopping up. No real direction. So the question is, are we going to continue chopping? Because we're now at these lows for the most part. So on DXY, is it time to finally invalidate this monthly BISI, or is it time for us to make our way back to the upside? You know, back into at least back into this bearish fair value gap or something like. But are we gonna go lower or not? Right now, you can see that in the past few weeks we've been pretty much consolidating at these lows, and on the daily chart, same vibe. So this is one of those times where it's a little difficult because you don't really have a higher time frame direction to tell you where the chop is gonna break out to. So I would say on DXY, I'm gonna have to see how we break out. I wouldn't take a trade until we see fair value gaps. I wouldn't take a trade until we see fair value gaps, or at least the beginning of one. Like if you see, like, let's say a huge red candle come out, then you probably could start getting interested in something. But until then, you gotta definitely gotta be patient. Like Andre said in the chat, definitely want to be patient because it definitely will pay you. So that being said, yeah, I mean DXY though, if I had to choose though, I do lean to the downside though. I'm gonna be real. I do lean to the downside on DXY, but I'm not saying that with conviction, but I do lean to the downside. Well, we'll see. Another thing I said would consolidate was the 2-year treasury. So for my people that follow the 2-year bond, we said this would consolidate last week, and you see that it continue to consolidate. So anticipating chop ahead of time has been major. Same thing I said for DXY. I kind of need to see where it wants to break out to. I lean to the downside for here as well. Why do I lean to the downside? Let me explain myself rather than just say something. And by the way, we don't move our arrows. So this was the plan. We wanted to see price tap into this to run these highs. It ran those highs. And so let me elaborate. Why do I anticipate a potential retracement now? Because we ran these highs for real. See, we actually came above them, and then we consolidated. And there's no fair value gaps in this price leg. So at least this one already got mitigated. And so to me, it's like we run liquidity and then consolidate. That's always, not always, that's a high probability sign that we may have a retracement or a reversal. So I wouldn't be surprised to see the 2-year break to the downside. So, and remember, apply this logic to all your charts. Consolidating before liquidity is valid. Consolidating after liquidity is something you should have your eyes on. All right, so boom, let's move to Euro. Now, Forex people, because DXY is consolidating, I told you guys that all your dollar pairs may consolidate. So when you see Euro daily chart and you see how we consolidated, are you surprised? You can't be surprised. We called this the week before. We said we should use this order block to run these highs. This order block was able to run those highs, right? But then we ran it and we continued to consolidate. So same thing I'm saying for other ones. We need to kind of look for fair value gaps in either direction to tell us what may happen next. I would be careful on all these Forex tickers. We talked about price coming to the 50% of this fair value gap and running higher. Things have been going beautiful. Everything we said is going to happen has been happening. We talked about this order block here, bringing price higher. We've been correct about all this stuff, but in the short term, the super short term, I think that British pound is going to come to this yellow line next before we run those highs. In the super short term, I can see this candle. If it's not this one of these are going to flip. The next couple candles will probably end up taking us down here, but ultimately, I just wouldn't really trade Forex this week until we really get some more direction out of the dollar. If you're trading dollar pairs, of course, same vibe here. Like everything we talked about, this fair value gap taking us higher. We got to our target. Everything has been good, but it's just everything is low probability conditions. So I don't have too much to say on Forex this week. We've been looking at this fair value gap on the weekly. See why this one? We want to use this fair value gap on the weekly because we want to hold the lower half of it. We don't want price coming up into the upper half of this price leg if we want to indeed make it down here. So you want to see sensitivity on fair value gaps when you're approaching an objective. Like we're so far from this objective, we don't want to see deep retracements. So I was never looking at this fair value gap up here or up here. I told you guys we're only looking at this, and I told you I want the bodies to hold the lower half of it, right? That was the instruction. So far so good, but at the same time it's a little consolidation as we expect. It's a dollar pair, and what is this, the last one? I got one more. Same thing, man. Consolidation, nothing to see here, and same vibe. So I guess really anything I said about Forex in the past still applies. I don't have any new analysis on it because we're just kind of stuck in place. So it's low probability right now. Now let's talk Bitcoin for a second. For crypto people, Bitcoin, same analysis I've had for the past 6 months. I'm only bullish if bodies is holding this busy, but as a bold prediction, and bodies are holding it, by the way, so I'm not bearish yet, but as a bold prediction, I feel that Bitcoin is going to eventually make a strong move back down. And I would expect it to come to the 30s, somewhere in the 30s, somewhere down here. It's hard to time the rejection because anytime price is consolidating, I don't try to analyze the inside of consolidation. There's no point, because what is the point of consolidation? It's to stay sideways, right? It's to literally go nowhere. So if the point is to go nowhere, what am I analyzing the inside for? If there's no real point of going anywhere, I would just wait for price to actually go somewhere. Then I would trade outside of that. So although we're consolidating, I don't know where the rejection could be, because if you've ever traded chop, y'all know things may look sweet and out of nowhere it just go like that. Y'all know how it is to trade chop, so you don't know where it's going to be, but I do think they're going to trade back to the downside. So that's Bitcoin, and my reason for that is because of what I told you guys on Ethereum. There's a divergence where Bitcoin ran all-time highs, but Ethereum did not. That's one. And then two, Ethereum had the same fair value gap that it consolidated on for months, and bodies was holding it the whole time. See, bodies continued to hold this thing. But when we finally invalidated on the week of August 26th, when we finally got a body under it, at that point I said, okay, cool, I think we're going to trade to the downside. And so Ethereum has still been consolidating here. That's fine. But by the simple fact that we invalidated this weekly fair value gap, meaning I got weekly bodies under it, because it's a weekly fair value gap, I need weekly bodies to invalidate it. Now I believe that whenever it's ready, we're going to end up making a deeper move to the downside. So it's a bold prediction for now, but we'll see. Now let's get back to futures. So that question in the chat that was like, yo, why did I choose the daily fair value gap versus the weekly one to target? For me, when I look at it, I like for my analysis to make sense on all time frames for the most part, right? So like, I know there's a weekly fair value gap that technically starts right in here, right? So there's still a little portion in here where, you know, we could have rejected. But when I go to the daily chart, that means that I would be expecting a rejection somewhere like right here. And if I were to look to the left, I would be asking myself, we didn't even like come into any efficiency or anything. It's like, what objective did we meet on a daily time frame? Like, we didn't meet an objective on a daily time frame. So I'm like, I'll be very suspect about that rejection. I'll be like, we probably gonna trade back higher. That's a buy the dip type scenario, real talk. So like, but notice that now it makes sense on both charts. Not only are we rejecting the daily SIBI, but we're simultaneously rejecting the weekly SIBI, right? It's still the weekly SIBI. They're now both weekly traders and daily traders are getting what they want at the same time. So everybody wins in this scenario. So that's why I targeted the daily for the person that asked that question. So now, boom, we tap into it. Now we're stuck between sentiment. We consolidating. It's very possible that price could consolidate in this overall area on the NASDAQ until NFP. I hope it doesn't do that, and no problem, by the way. But I hope it doesn't do that, but it's possible. My ideal thing and by the way, let me say this too. If we're bullish on NASDAQ, body should hold this VI, right? Body should hold this VI and take us higher. If we come under this VI, then I would expect some real a real bearish move on the NASDAQ. I'm gonna be real. And I'm not saying it has to happen right away. I'm just saying that, like, if let's say Monday closes right here, right? Like Tuesday, Wednesday, and Thursday could look like this, but NFP will drop us. You know what I'm saying? This is a volume imbalance. All right, so under here, I'm like really bearish. This is the last bull case for me. Like, you see how bodies is holding it so far? Yeah, because it's a valid bullish PD array. Price could use it to go higher, but I anticipate that it's gonna end up turning back around and going back bearish. That's my prediction, but it's very early to say. Like, we're here at our POI, and we're at a very important place in price action. Like, this over area is very important for bullish people. Under here, I think it gets pretty bad. So I could see us losing this area. I can see us losing this area probably on Monday during the day. I wouldn't be surprised to see us, you know, just stay in this overall area overnight right now. And then during the New York hours on Monday, I wouldn't be surprised to see us like drop off. So Monday is going to tell us a lot about the week. So I guess let me just tell you my scenarios. All right? Let's talk all our cases right now. All of our cases right now. So look, on the NASDAQ, over this bearish fair value gap, I'm not really bearish anymore, right? I would expect us to run all-time highs after that. So that's one. That's the bull case, especially using this daily VI to take us above. Like, yeah, I would definitely be like, okay, we still bullish for now. Now, as long as we're holding this blue area, then I anticipate us to drop out of that blue area. That's another thing. Now let's talk days of the week. If Monday can be a big red candle like this, then I would anticipate that we already put the high end of the week. First of all, if Monday is a big red candle, I would anticipate that Monday is the high of the week, and I would anticipate that Tuesday, Wednesday, Thursday would probably stay in this general area, and then NFP would take us much lower. NFP may take us into this BISI, this daily bullish fair value gap. Now, as you can see on my screen, I'm telling you ahead of time that I expect this daily bullish fair value gap to get traded through. It's on my screen because it's a target. it's not something I'm expecting higher highs out of. This is a fair value gap I would expect to get maybe a reaction, maybe some chop, but not a higher high. Definitely not a higher high. I wouldn't expect that. I would just expect we're either going to trade through it, we're going to chop on it, we're going to retrace off of it, but we're going to end up trading through it eventually. And so, yeah, that's pretty much my analysis. And the thing is, once we come under, if we're able to come under this purple area, then at this point, this low becomes really probable, and so does this low. And then under here, you know, I'll give y'all updates on what my expectations are if we're ideally able to get to this yellow line. But that's obviously, like, this is a super bold prediction, but I definitely told y'all way long ago, I told you guys, whenever a price gets to this blue area, I'm expecting price to drop off out of there. If it doesn't, I promise you I'm gonna make money regardless, because, you know, I'm always gonna only take plays with confirmation anyways. But this is a valid place to drop off from. And I don't know if y'all been checking out the videos I'm gonna put in the free community where I was highlighting why we like this area, but as a quick recap of why, very quick recap is, I don't think that we engineered this liquidity, meaning we had two like relatively equal lows. See how we bounced right there, came up, and then we came down, and then like all of this is engineering liquidity. This is all manipulation. This is all consolidation. They don't do this for no reason. If we really were bullish, first of all, they would have swept these lows. It would have swept it, and then it would have come up, and it would have never made this deep retracement like this. First of all, it would have never done this. It would have just like had a minor retracement maybe, and then continue higher. So it's like the manner in which price is moving up is very suspect. And on top of that, if you look at this whole price leg is disgusting, and there's no fair value gaps, which is telling me that it doesn't really want to move in this direction for real. It had to come to its objective. It got there now. I wouldn't be surprised to see. I'm gonna get to ES. I got you. I wouldn't be surprised to see if it drops off. So, you know, my prediction that I gave you guys in August, I said I believe I can see the NASDAQ making a lower high, such as on this blue area. I said I could see us making a lower high right here before this lower low. And I said ES, the S&P 500, will make an all-time high, and then it's going to drop after that. So if I were to show you ES's chart right now, what do you think we just did? Right? We ran all-time highs here, while the NASDAQ has so far made a lower high. And so everything is playing out from what we said back in August, late August. It's on footage in the free Discord right now. So we'll see. They're both moving really stubborn to the upside. So they're showing some good signs that they want to drop off soon, but it's all about timing and confirmation. So, yep. Monday is important for us. If Monday is big red, I think we put the high end of potentially of the month. This is such a bold statement. I don't even know why I'm saying this on the free community, because I only really see y'all visually once a week, so there's no adjustments that can be made. Versus my mentees, I could adjust on the fly really easy, and they also know what to look for because I teach them how to fish too. So I don't like to say certain things that's too bold because people don't know how to adjust. So I would just say to please be patient, wait for confirmation, and don't take trades based off of like what I'm saying here unless it makes sense to you, because I know how to adjust. Like I'm telling you right now, like let's say we start going, I'm gonna make money to the upside. Like if we push to all-time highs, I'm gonna get paid in that direction. What I'm saying is what I'm anticipating, and I'm telling you guys why. If we engineer liquidity and we didn't meet the sell side objective, right? We did not meet the sell side objective. I expect lower highs. That's why I'm looking at this area. So I have logic. I'm not just saying a random prediction. Like we engineer liquidity, we're steadily moving up, so I expect a lower high. That's why. Where would the lower high be? At this bearish fair value gap. That's where it will be. You know. So we'll see. Yeah, we'll see. But yeah, and then once again, like I said, you guys, everybody's been protected. It's too sweet right now, right? For the bull, it's a little too sweet for me. We gotta at least take these people out. But like, if we gonna take these people out, that means we're all the way down here, right? That means we're all the way down here somewhere. Why would we come down here not to touch the purple? That's how I look at it. Why would we come all the way down there not to touch the purple? And if we touching the purple, I already told y'all, if we come down here, I don't expect us to do that. No, if we come down here, it's very likely we're gonna come here and then there. So that is the logic. That is my logic. I'm not just saying random things. I don't ever like when the market is just one directional and it's moving super stubborn. I'm always suspect about moves like that. Always. Price is fractal, right? Price is fractal. Look at the 5 minute. I already broke this down for you at the beginning of class, but look at the 5 minute. This is like a 5 minute version of what I'm talking about. One directional, but it starts moving really stubborn. Then all of a sudden, this type of move tends to follow those type of moves. You catch my drift? So I'm just looking at that from a daily perspective. Same logic. And that's why we caught this downside. I'm just trying to see the same thing on a daily. All right, so let me move off NASDAQ. Y'all know all analysis there. You said only thing that concerns me for bears is some of the mag segment looks strong. I'll look into that. But like, that's why it's at the end of the day, it's gonna take confirmation. Like I wouldn't even go short for real unless I'm seeing what I want to see. You know what I'm saying? This is all so nobody gets caught off guard. I think it's kind of easy to see uptrends. We're already in an uptrend, so if price is maintaining it, please stay bullish, y'all. But once y'all start seeing like once y'all start seeing like bullish things getting invalidated, like this VI, if we get a daily body closure under this VI, that's your first sign that we might want to start some downside, you know? And if we come under this red candle, that's another sign to you guys like, yo, whoa, okay. That's a good sign for some more downside. And if, to be honest, under this red candle, I'm straight up bearish. I ain't gonna lie, like under this red candle, I'm definitely bearish. And so I'm kind of having you guys more so prepare for the potential downside. If we continue to hold these areas, then just play upside, please, because I know I will. I know I will. So please, y'all, don't ever marry analysis. We marry confirmation. We marry confirmation. So this is ES, same vibe. Like I already kind of explained it via NASDAQ, but like I said in August, once we come over all-time highs, I'm expecting us to start trading down shortly after. So we'll be looking for that on ES. Look for bearish fair value gaps to the downside. Definitely a quote. And so as you see here on the 4, this is chop, right? This is not really good conditions. Definitely be careful. But once you start to see bearish fair value gaps, you may want to take some continuation because it could get kind of ugly. On the Dow Jones, moving to the Dow Jones, they left their all-time highs, but look how they moving above it. Price don't typically move like this when it wants to really make a real move, when it wants to continue. This is real suspect. That's all I'm gonna tell y'all. This choppy, steady move, real suspect. Don't be surprised. Don't be surprised. The Russell is chopping around right here. I said to you guys before, anytime we run liquidity and then we chop and there's no fair value gap here, then I start to look at potential retracements or reversals. So I would be careful trading the Russell though, either way, because we're still in a consolidation period. Overall, when you zoom out, you see the Russell is pretty much, it's been consolidating for mad long regardless. So I'm not a fan of this ticker. The Nikkei here, the Nikkei is interesting to me. So the Nikkei, this was the target to the upside I gave on the Nikkei a while back, this weekly SIBI. So on the weekly chart, feeling that they may want to push into this, but not make a higher high. So I love the rejection we had gotten last week. We pushed above it, and you see this pretty nice move to the downside. Now, what I'm looking at right now, what I don't like is for continuation, I would have wanted to see us reject right here. You know, so seeing how we're opening up here in New York makes me feel like, the move might not be ready yet. We're not in New York. I'm tweaking. You know, right here, like around the Asia session, I would have wanted to see us reject right here if we're going to continue. So this tells me we're probably going to end up coming deeper into this range. I wouldn't want to use this fair value gap to go lower, right? I wouldn't want to see that. So we're either gonna probably make a higher high, or this would be where we're consolidated. But either way, I don't want to trade. I wouldn't trade Nikkei right now. So I'm actually gonna kind of. I like the rejection we got, but the move is not doing what I wanted to do for continuation right now. Right now, if we wanted to continue, this would be the fair value that we would use right here to continue. So pretty much moving on from that. Like if I don't see what I want to see, I'd be like, all right, cool. There's other tickets to trade. That's how I look at it. So strong push up early right now so far. Let's go CL oil. We almost done. Let's go CL oil. We were looking at price to reject this fair value gap, and it's rejecting it, but I'm not a fan. I would actually stay away from this ticker overall because it's the way that it's moving. It's the way that it's moving. I don't like either the upside or downside. Personally, CL, I would stay away from this week. I guess let me tell you why. It's right. I don't just say things. I gotta tell you guys why. So let me explain why I would stay away from a ticker that looks like this. So when you zoom out and you go to the monthly time frame, right, and you look at whatever ticker you want to trade, and you say, man, the monthly's been consolidating for a while. All right, so that's the first sign that's like you may be in low probability conditions right now. And Tanise said, yeah, it moved real nasty last week. Real talk, it did. So then when you come to the weekly and you think to yourself, what's going on here? I don't like this. I don't like the fact that we came down this low and didn't run these lows. We came up this high and didn't run those highs. Automatically, we're probably going to chop in between these 2 points, meaning we could chop like this in between here. That's a potential off of that. Now let's do it again. We came down this low and didn't run those lows. We came up this high and didn't run those highs. All right, so automatically you might be looking at some chop. Now we run these lows, so you're like, okay, maybe we're breaking this range a little bit. Let's put a yellow line there. We broke these lows, right? Okay, so that's why I told you guys, I really want to see if price could hold the lower end of this fair value gap, not the higher end. I want to see if price could hold the lower end of it. Okay, so because that's the only thing. If we were bearish, that's the only thing that could potentially happen. When we start moving to the higher ends of this and stuff, it automatically to me it's like, yeah, nah, I don't like this delivery for bears. And so therefore, I just kind of look at it as an overall no trade area. And I would just start looking at if we could ever lose this red area, that would be nice. Once we lose this red area, CL has potential, especially if it involves fair value gaps. But until then, this overall area is just low probability. As y'all can see, the movement on the upside was really ugly. The downside is not that pretty either. And so I'm staying away from them. Let me see my phone. I know I missed something in the chat. And I agree. Somebody said, I hate the fact that all-time highs was done in pre-market. The market makers are always so tricky. They never make it easy. And that he was talking about on ES. And that's a fact. Like they know what they doing. They never make it easy, like you said. And then you said CL for you break consolidation, make you bored, then fall out the sky. Oh yeah. I know what you're saying. I think you made some typos, but I still know what you're saying. Like that is how CL is. Like they'll consolidate for a while and then just a dramatic move out of nowhere. And then once you notice that, you try to hop in. As soon as you hop in and start chopping again, and it's just like, especially in this time period where CL is moving like this, that's exactly what I anticipate. That's why I say it's not favorable. So let's go. Gold last week. We wanted to come to this second target. We obviously moved past it, so it played out. But now you see gold is moving pretty choppily. And so let me explain to you guys why I told my mentee on Friday that I think gold is not gonna continue lower on Friday. So we were looking at this on Friday. Once again, I'm trying to tell you how to play defense in the market, right? How to play defense in the market. So you see gold is moving real tricky, right? Real tricky. One thing that's nice is that it moved higher here. So meaning we ran out buy side liquidity, meaning anybody who has stop losses on top of these highs, they got stopped out, right? So we ran them out. As we came down here, we need to move aggressively to the downside. That would be a beautiful bearish type of setup that we typically see happen in the market. So when you notice that we stop short and we trade it back up, automatically I'm like, okay, when I see something like that, I would say I don't want to trade this whole area. So off the rip, I'm only looking for moves under here, and for the most part, like around over here somewhere. This is a no trade area because this is potential chop. So that's one way you can see chop happen, because I'm looking at the delivery on both sides. I already told you why that would be weird for a bearish person. How about for a bullish person? Imagine you took buys. You would be asking yourself, why did price come all the way down this low just to come back higher? Yeah, you're right. Why would it do that? Yeah, because it's not actually bullish. You're on the wrong side of the market. It's consolidating right now. So both people are like, yo, what's going on? That's how you can anticipate chop. All right, so anyways, you see we ended up chopping like you would anticipate. Now price makes this big move here Friday at 10 a.m. Big red candle to lead that range. Okay, if we're truly bearish on gold, we would, first of all, we would drop right away, meaning the next candle that opens up needs to go like that. It needs to go like that. Then we get this candle. That's iffy. When I see this candle as the third candle in the fair value gap, now this is a phase 2 concept, but it kind of tells me something, right? It tells me a lot about what's coming next. And trust me, what it tells me is that we're not going to keep going to the downside for real. And so my mentee at first was like, dang, I missed my move on gold. Like they dropping finally. And I'm like, yo, trust me, it's not really about to drop. It's about to come right back into the range. It's about to come right back up in here and it's going to chop in here for the rest of the day or something like that. But it ain't leaving the range yet. Because if gold was ready on Friday, trust me, this candle would have opened up and been red. If we leave in the range, you want to leave it with aggression for real. Understand me? So next thing you know, price makes a doji, and then yeah, we see how we ended up on Friday. So and into today still, we're still in this range. So overall, looking at gold, still would tell people like I'm not really interested in anything in here. I think that it'll probably make a nice move if we lose these lows though. Right? So on the downside, if we could lose these lows from Friday, if gold loses Friday's lows, you probably see a move under all of this price action. This whole area would probably get killed for real if we lose Friday's lows on gold. And to the upside, you know, same thing. If we go to the upside, make sure that you see fair value gaps above these highs. If you see fair value gaps above these highs, you could take some continuation. But we're at all-time highs right now, so you gotta, of course, be careful on gold. But that's how I trade that personally. That's how I trade that personally. So there's gold for you. And then where we at? Last couple tickers, right? Yep, last two. Because I am starving. Ain't gonna lie. So so SPY, man. Same thing like I said in late August. We were trying to see SPY come above these all-time highs and then make that deeper move down. And we wanted to see QQQ make a lower high at this gap. So, and the footage is in the free community. I reposted it this weekend so you guys see. We don't say anything in hindsight. When price was down here, I said QQQ, I expect us to make a lower high if we could just fill out this gap, and then that could be a potential place where we make our retracement from, or we make a reversal from. So when I talk to y'all about objectives in the market, this is what I mean. This is what I mean. You see how we perfectly filled that gap out before dropping off. I drew it based off the 4 hour. I wrote daily, but I drew it off the 4 hour. Okay, so either way, you can see how we perfectly filled that out, and then we'll see what happens, right? We'll definitely see if we're going to continue to the downside or not, but this was still a nice play to take, because anybody who took a trade off of that gap fill, well, we actually opened up there in the morning and immediately dropped up. It's still a nice trade to take. Now it's just a matter of, do we see continuation? I already told you guys on NASDAQ, because they're the same thing. It's the same thing, but you can see on QQQ, anybody who's been bullish has been protected. Every dip has gotten bought up, and we've continuously made higher lows, higher lows, higher lows. But we're moving super steadily. Notice that every higher low doesn't create bullish fair value gaps after the fact. We make a higher low and then we creep up again. Higher low, creep up again. Higher low. Then we gapped up, but then we invalidated that gap, right? We invalidated that gap. So The bullish delivery is disgusting, yet we have not accomplished stopping these people out. So you can see why I'm very suspect on upside. You can see why I can see a drop off happening in the market, but we don't marry analysis, we marry confirmation. So we always have to make sure that we wait for confirmation before we get involved in anything. But so far, everything we talked about literally since last month has been playing out. It's just a matter of like, this is the crucial time period. Is it going to continue to the downside, or are we going to move higher? It's left to be seen. If you see bullish setups that you like, don't be afraid to take them, because I'll probably be taking them too. I'm always willing to adjust. That's the real skill set, being able to adjust on the fly. All right, so that being said, I'm gonna cut the recording, and I'll address any questions in here, any comments in here after the recording. If you're watching this on YouTube right now, click the link in the description for the free community. But not just that, get the discounted price on the mentorship for December. That's gonna be in the description as well, because I just got that link during the class. So mentorship and free community, whatever you join, you're gonna get better as a trader. I can guarantee you. BT SMC is the one-stop shop for profitability. That's what we call it. And yeah, man, tap in on me. With that being said, that is all she wrote.